In this presentation, we will continue on with our bank reconciliation for the first month of operations. Last time we reconciled the deposits. This time we're going to be moving on to the checks and other decreases to the checking account. Here we go with Xero. Here we are in our Get Great Guitars file. We're going to start off by opening up our trial balance by going to the accounting drop down and down to the old trusty trial balance, the TB. We're going to right click up top. We're going to mouse over the item up at top and right click on it and duplicate that tab. Then we'll change the date. So we're going to make that date for the end of January. So I'm going to make this January 31st and update that report. And then we're going to take a look at the bank reconciliation report. So let's go back on over to the first tab, and then I'm going to go to the accounting and reports. So I'm going to go to the accounting and then the reports, looking for the bank reconciliation, which is down under the accounting section. We want to take a look at the bank reconciliation summary. Bank reconciliation summary. As that opens, I'm going to mouse over the tab up top and right click on it and then duplicate that tab. Then we'll change the dates up top, and I want to make this for the checking account. That's what we're going to be reconciling. We're going to be reconciling for the date as of the end of January. So we're going to change that to January 31st, and we'll update the bank reconciliation. So last time we reconciled basically the deposit side of things, and the thing that was left was only that $996.45, and everything else we checked off because we found it on the bank statement, and we found it on our books, and therefore we marked it as reconciled. And that means it's no longer in our reconciliation report because we only have the unreconciled items here. This is our balance per the books. As we can see over here on the trusty trial balance, we have the $94,979.12. That matches the $94,979.12. We want this number at the bottom to reconcile to what's on the bank statement, which is here. One of those differences will be an outstanding item for the deposit, which is not included here, but is on our books because it's a timing difference, hasn't cleared. Now we're going to go to like the longer section, that being the deposit or the outflows, which would be checks and other types of outflows. Now, when you think about the outflows, just note it can be a little bit trickier. Both of these sides have their little tricks. You know, if we had the deposit side of things, notice how easy it was to deposit because the deposits in the bank statement are grouped in the same way they were on our books as of. If you're in a situation where we had, the groupings different, like you have possibly credit card deposits are shifting over to your bank account in some kind of funny way, and you have to group them together, then it could be a little bit more tricky. Or if you have a lot of cash, accounts that you're collecting in your system and you're not using that clearing account as we did, and you're putting it into the bank, and you got to basically match up multiple deposits to what's on the bank statement, that could be a little tricky. Notice we talked about that with the clearing account. The reason it was easy for us is because we're imagining here that we grouped everything in such a way that we made the deposit in the bank in the same format as we had it here. The checks have their pros and cons as well. Obviously, there's typically going to be a lot more checks and outflows that will be in the place. Now, the problem with the checks, notice the deposits, hopefully the deposit will be somewhere near when we actually made the deposit. When we physically made the deposit, it should only take a couple days for it to clear the bank, if that. The checks, on the other hand, if we wrote a physical check and then sent it to somebody, well, that could be a long time between the date between which we wrote the check and someone got the check, deposited the check, their bank account told our bank account. So the date is going to be much less reliable. It may be the case that someone doesn't deposit a check for months, Yeah, it could be the case. So that's one thing. A little bit more difficult on the check side of things. Also note that depending on how your bank statement looks, you might not have the detail for the check. So if for whatever reason you didn't enter the check into your side, our bookkeeping side, then we might have to go look into the bank transaction, the canceled check, and see who we wrote the check for and that kind of thing. If it's electronic transfers, then you would think the date would be more reliable. In other words, if you make a payment like utility bill and this and that, and you actually do an electronic transfer for it, you would think that you would be within a few days of the transaction date, just like on the deposit side. It should be pretty quick. The date should be a lot more reliable. And you also would have to think about, well, what's it going to look like in terms of the vendor in that case? Because if it's an electronic transfer, it's less likely. You might be more dependent on the bank in that case. And you're going to want to say, okay, how's this going to look on the bank feeds or on the bank statement, so that I can then enter it into my system, right? What's going to be the description that's going to show up on the electronic transfer on the bank statement, so that if you have to enter it in or verify it, you can check those items. So if they're checks, then we also have the check number on the bank statement, which could be helpful if we're actually writing checks. We don't have any check examples here, but just note that you also have the check number that can be helpful because, again, the checks lag in terms of the date. So if you have the check number, that'll be a double check. So, and you also, of course, have the amount. So for the checks, you have the amount, you have the check number. Date's less reliable for the check. Electronic transfers, you have the amount. You don't have a check number, but the date should be, more reliable for you to kind of tie these things out. All right. So let's go through this same kind of process. We're going to go back on over and we're going to go to the first tab again. And let's go to the dashboard. So we're going to go into the dashboard. We're going to go down to that kind of banking section down below. Let's check the other way you can go into here. You could go to the accounting drop down and then bank accounts. This is another way that people, might go into here. It might be useful to see. Here's all your banking information. We're going to be down here in the checking account again. And then if you go to this manage account, this is another way you can get there. So I'm going to go into the account transactions. If you go into the reconciliation kind of item, you'll typically get to the same general spot. You'll get to these 3 tabs, right? And we want to be in the 3rd tab for the account transactions because we're going to manually reconcile. In other words, change these items from unreconciled to reconciled. Remember, to do this, you want this enabled. So it says disable now. We don't want to disable it because we had already enabled it. But if it's not enabled, you'll have to enable, and then it'll say disabled in case you want to toggle back to the other way. And that'll give you this other tab over here that we can mark as reconciled and unreconciled. All right, we're going to go down to the accounts down below. These are going to be the January transactions. We're looking for the outflows, which are going to be on this side, kind of the left-hand column. So if we go back on over, we're going to say, all right, let's find that 12,000. Now we're always going from the bank statement back. So we're going from the bank statement back over to here and finding them. One more point before we start. Notice the bank reconciliation has all of the outflows currently as unreconciled. Once we check them off, this column will decrease as we check them off down to whatever's still outstanding. Okay, so let's go back over. We're going to say the 12,000, here's the 12,000. I'm going to check it off, and then I'm going to reconcile them all at one time. So I'm going to go back over, and I'm going to say that one's found, done. Let's look for the 16,000. 16,000, here's the 16,000. Looks good. Notice the date here, January 10th, and the date here is on the 19th. That will typically be it'll always be the case that it should be on your system before it cleared the bank. Now, again, if you're dependent on the bank feeds, then you're going to wait till the 19th till it clears the bank. But if you're doing the full service accounting system, you would enter it into your system, and it would always be sometime before it cleared the bank because we knew about it when we wrote the check or when we issued the transaction. The bank doesn't know about it till it clears the bank. So here's the 16, and if you're talking about checks, it could be vastly different. It could be very kind of crazy the way it clears the bank because it just depends on how long people wait to enter the check. That's why if you write a lot of checks, you may, even want to sort your data over here basically by check so that you could find the checks first maybe and then sort by date and look for the electronic transfers because that'll make it a little bit easier possibly just for searching out your transactions. But now I'm going to find the 7,000. 7,000, there's the 7,000, so that one is good. Let's make that one green because that's what we do when stuff is good. And then this one's the 400, so the 400, here's the 400. Notice I'm basically just checking the amount. If there were check numbers, I would check the number as well, but I'm basically going by the amount and the date. And the date's going to be fairly close, but not right on. And if there were electronic transfers, again, I could rely more on the date if they were electronic transactions. If there were checks, then I want the check number because then I can really use that to double check. Then we have the 598, so we have the 598. So there's the 598. And then I'm going to make that one green, and then we have the 620. So back over here, the 620. So here's the 620 up top. So we find that one, and so that one, checking that one off, and then we have the 15. So then we have the 15, and if I go back up, here's the 15 here. So we're good on that. So I'm going to make that one okay. Now, then I have these two down here, the with the 80,000. If I go back over, I don't see an 80,000. What am I talking about? $80. So if we go back over here, we don't see the $80, and that's because it's a withdrawal. So we don't have that. We didn't input that. So we're going to say, all right, now it's on the bank and it's not on our books. We're probably going to have to fix our books and add it. And same with the bank service charges. We may not know what those are until we have the bank information. So in this case, with the bank statement. So that's something I'm going to have to add as well. So what I'm going to do then is I'm going to add these. I'm going to reconcile these. I'm going to go back up top and say more, and then I want to mark as reconciled. So I'm going to mark these as reconciled. Those 7 items then marked as reconciled down here. And, well, they're not yet. It was taking a little while. It was thinking. Now they're marked as reconciled. And then if I go back over to our reconciliation report, and once I update this, many of these are going to go away now. So because I marked them out as reconciled. So let's check that out. Let's update the report and see what happens. If we scroll back down, now we have these items as the outstanding items because we checked everything else off. So these are items that didn't clear the bank yet. We haven't cleared it. Now, that means that they're probably going to clear in February. So again, if I'm concerned about them, I'm like, hey, I wrote the checks for these items and they're not on the bank statement. Why? Well, that's probably the case. It's probably the case that we wrote them. In these cases, you can see they're all in the end of the month. So they probably cleared in February, and I can check that. I can go to the bank feeds and for February and check it and say, yeah, they cleared in February. That's fine. But I want to reconcile January 1st right now, so they're outstanding in January, because as of the date on the bank statement, they're going to be a difference between the bank books and our books, and therefore they need to be outstanding as of the end of January. So there we have that. We're not there yet, though, because we have to enter those 2 other items that are on the bank statement that aren't on our books. So that's going to be these items. So in other words, if I was to pull up our old calculator here, we say, well, how close are we now? We're at the 109,917 minus, and then if I went back over here and said, here's like the ending balance that they're saying the bank statement balance should be, which is 110,012. We're off by $95, which is these 2 items. So now I just got to enter those 2 items and you think would be okay. So let's check that out. So I'm going to go back over and let's go back over to the first tab, and let's actually keep this one. Let's right click on this and duplicate that tab as well. So we have that one. And then I'm going to go back to the left and I'll enter the transaction just basically as 2 transactions. I'm going to say the plus button up top, and we're going to say this is going to be money out. So this is going to be money spend or spend money. It's going to be going out of the checking account. So we're going to say out of the checking account here. And so we're going to say to. Now, we don't know who it's going to. We're going to start with this miscellaneous. This is someone drew the money out. Now, let's imagine we're the bookkeeper and we're working with like an owner of the company. Now, every time this happens, we have to ask them, well, what, you took money out directly. Now, hopefully the answer is, well, every time you take money out directly, because we don't know who you spent the money on, then you should only really do that if you're taking it out for your personal use, and then we can just mark it as a draw. That would be the ideal situation. Everything else, whenever you spend money on stuff using electronic transfers and checks, because then we have an audit trail, which you want for money going out, because that gives us verification for it, and that's what we need for like taxes, because money going out is a deduction if it's legitimate typically. If you take cash out, then we don't have the audit trail unless you copy receipts and this and that gets messy. So don't take cash out unless you're taking it out for personal use, taking it out for your own use. In that case, we call it a draw. However, if they take cash out, if we ask them and they say, well, we took cash out and I spent it on business stuff, then we're going to go, okay, so now we got to put it in the books as some kind of expense account. We don't know what expense account it goes to because it was just money coming out unless we have receipts. If it's a small amount and we say it's for cash, then we're going to put it in like miscellaneous account or something like that. So we'll put it into miscellaneous this time. Next time we'll put it into a draw and we'll take a look at the difference between those two. Miscellaneous means it's an expense. It's going to be decreasing the account for the net income. A draw means it's not going to be decreasing the account for net income. So I'm going to put, this is the owner, let's just say. And we're going to put this happened at the end of the month. So we'll just put it at the end of the month into January. And this is going to be a draw, or I don't know. We'll just put 1, and it was $80. And the account, then we have to use some kind of expense account here because we said it was some kind of business expense, but it was cash that came out. We don't know who the vendor is or what it was spent on. So we're going to say, is there a miscellaneous that we can put in here? A miscellaneous expense, meals, mileage, bad debt. Here's miscellaneous. So we'll put it in the miscellaneous. You don't want a whole lot of things in miscellaneous because it can look kind of funny. And again, who's going to care about that funny looking thing? The IRS. If you have like a whole lot of money in miscellaneous uncategorized expenses on your tax return as a deduction, that could be, if you were looking at that as an IRS agent, you got like a whole lot of your expenses happen to be grouped in miscellaneous. It would be, kind of funny looking. So you want to stay away from that. A little bit in there isn't unusual, but a whole lot would be kind of unusual. Okay, in any case, we're going to save that. We're going to say yes. And then if we go back over to our transactions then, and if we were to update the transactions, and there's no update button, so you can update by just refreshing the screen. So I'll just click on the URL and refresh the screen. Then we should see that $80. There it is. I'm going to check that off, and I'm going to say, let's add that, make that mark it as reconciled. That has been reconciled. And then if we go back to the reconciliation and update it, then we're going to say that the $80 is going to be reconciled. We should be that much closer down here on our bottom line number. So we're at the 109. Just to double check this as we go. We're at the 109,932 minus, and then if we go over to our bank statement, the ending balance here minus the 109,917, we're off by just the $15 now. All right, so let's go add the $15, and then we should be good. I'm not going to close this. I was about to close it. That's not what I want to do. Back to the first tab, we're going to select the drop down, and once again, spend money. It's going to be coming out of the checking account once again, so it's going to be removed from the checking account. We're going to be spending money from the checking account. This one's going to go to the bank, which we could put like Wells Fargo. And this is going to be as of the end of January, and this is going to be bank service charges. I'm going to say for $15, and then something like, let's try to type in, there we go, bank service charges. So they have an account for that, 6040. Let's do that, bank service charge. There we have it. All right, so there, that is good. So let's go ahead and record this and record that. So then, if we go back over and we go to our second tab over here where we're, oh, I did that in the, no, yeah, okay. And then I'm going to refresh by going up top and refresh the screen. And then go on down. We should then see that $15 on January 31st. There it is. We're going to check it off, and then we're going to reconcile. So then I'm going to go back up top and say that, mark that one as reconciled, please. And it does so. So then we're going to go back to our bank reconciliation and update this report. And this bottom number should change now. So I'm going to say update, and so should the top number, this 94,884. So what we're doing when we do this is we're changing this top number, which reconciles up to the trial balance. So if we update our trial balance, we are now at the 94,884, and that's going to be here. The 94,884 is now our book balance, which we adjusted for the two items that were not on our books yet, that were on the bank statement. So we adjusted our books for that, and now we've found everything that's on the bank statement on our books. And if it wasn't there, we added it because the bank's probably right. Unless we're going to argue with the bank. If it's on the bank statements and not on our books, the bank's going to be right. Unless the bank messed up, which is rare, but could be the case. It has happened. So then you go argue with the bank. But typically if it's there, and even if you are arguing with the bank, it'll probably be reconciled on a future bank statement. Meaning you're probably still going to have to enter it into your system to basically reconcile. And then you could argue with the bank and it'll be taken out or reversed in the following bank statement. But in any case, there we have it. So now we have the book balance tying out to what's on the trial balance. So if we go back on over to the trial balance, we have the 94,884.12. And then we have the outstanding checks. These are the checks that are we wrote, or checks and other kind of outflows that we wrote. We know about them. We wrote them. They should be decreased in the book accounts. So we're right about those. However, they haven't cleared the bank yet because they were done at the end of the month. So we want to know exactly what those are so that we can reconcile number 1 and number 2 so that we can check to double check that they have cleared in February. And then we have this deposit, same thing. We know about the deposit. We entered the deposit into the bank, but it hasn't cleared the bank as of the end of January. So those are the reconciling items to get us down to the bank balance. So in other words, the system's calculating this bottom number. And if we have everything correct, then this bottom number should be tying out to what we have on our bank statement, which is the 109,917 as of the end of the month. So we're looking, here's the bank balance. Here is our balance. These are the differences. How did we get to those differences? We backed into it. We basically said, we'll find everything on the bank statement on our books, and then anything on our books that's not on the bank statement is what's left as reconciling items between those two numbers. And so there's going to be our bank reconciliation. Now, once we have this, you really want to export it as you have it. You kind of want to have a hard copy of this report once reconciled. So now I have it reconciled. I'm going to go ahead and print this out, and I highly recommend that, again, you have this printed out after you have done the bank reconciliation, and so that you have the hard copy of it at that point in time. So I'm gonna print this out in our standard kind of fashion here. There's our PDF file. I'm gonna drag that on over. So I'm gonna drag over the PDF file. I'm gonna right click on it and rename it. So I'm gonna right click and rename, and I'm gonna call it bank rec. And you might want even the date up front. So you might want to group this by like year and then the months. So I'll put this 01 or bank, and then you can say bank rec for January, and that way it'll kind of group it by month, 01 being the January. And then you can export it. We'll do the exporting thing too. I really like that it allows you to export to Excel. Not all software allows the bank reconciliation reports to be exported to Excel for whatever reason, because they're a little bit different to populate. So some software, doesn't give you the same options that they have with other types of reports. So I really like that you can export this to Excel. So here we have this, and there's going to be our bank reconciliation. Now the first tab is the tab that we're really interested in. The second tab is kind of like the bank statement information, the stuff that basically cleared the bank. So you got the beginning balance and the cleared the bank, and then the ending balance, and then you got the statement exceptions. These are going to be the amounts that basically we entered into the system. But if you were to give something to an auditor, you'd want this first thing as a perfect summary. This is exactly what the auditor would basically want. Hey, you give me the reconciling items, right? This is the balance per the books. This is the balance per the banks. This is the difference between the two, and we're giving you exactly what those differences are. And if you want to double check them, take a look at February and double check them. So what I would do is print this one out, and you may even want to hide these tabs possibly if you want to have all your bank statements on one Excel sheet and print them out. So you might, for example, have this one. I'll keep that data. I won't delete it, but maybe I'll just right click and hide that tab because I don't need it, and I'm going to hide that tab. And then maybe I'll put all my bank reconciliations on one tab, on one Excel sheet, so I can print them all out as I need to do so and have it all in one space. And I'll have that added detail if I need it, but not something I'll print out. And then I'm going to double click on this tab down below, and I'm going to say this is January. Now I'll save this. I'm going to go to the File tab up top, and I'll save it. And I'll save it to our folder where we've been putting everything else here. And it might be better for me to drag it in there like we were doing before, but whoops. I'm going to put this up top here in the location. That's what I was trying to find with that pasting. So there, it's in section 9 folder. I'm just going to call it bank recs for I'm going to say 2020. And then I can imagine just putting all of our bank recs here, right? So then I can imagine every tab. So we'll do February. I'll put February here. And then if I wanted to print out all the bank recs for the year for like an auditor or give this report to somebody, then we can give them, all the bank recs. So I would highly recommend, having all the bank recs either in PDF format or in an Excel sheet or both, if possible, after each bank reconciliation. And that way you can go back to them. And if there's any problems in the future, then you know where you stood at that point in time in terms of the bank reconciliation. So that's going to be it for now. Let's get out of here.